Welcome first year commerce students to Exam Tips and Tricks channel. Today we'll understand one more question from the model question paper based on reducing balance method, or this method also called as written down value method. In the previous video we have already learned straight line method. Today let's understand another method called as reducing balance method. Here is a problem. On 1/4/2020, A Company Limited purchased a machinery for 80,000. On 1/10/2021, additional machinery was purchased for 60,000. The company writes off depreciation at 10% per annum on reducing balance method. The company closes its books on 31st March every year. Prepare machinery account and depreciation account for 3 years. So here is machinery account as well as depreciation account. So first let's understand preparation of this machinery account. So already I have prepared this machinery account. So the format of machinery account will be date particulars, journal folio amount, date particulars, journal folio amount under credit side. So 1/4/2020, firm has purchased a machinery, record that as bank account, under debit side as 80,000. So that is the first entry. So accounting period begins right from 1/4/2020 and it ends on 31/3/2021. So at the end of first year, depreciation has to be charged on 80,000. So 80,000 into 10%, so that will be 8,000. Now first year has to be closed, so 80,000 under debit side, write the same total 8,000 under credit side. From 80,000, as we deduct 8,000, we get a closing balance of 72,000. It has to be recorded as balance carried down. The date will be end of accounting year, that is on 31/3/2021. So we are asked to prepare this machinery account for 3 years. So first year we have prepared and we have closed first year. Second year begins from 1/4/2021 and it ends on 31/3/2022. So 1/4/2021, what was the closing balance? It has to be brought as opening balance to the second year as balance brought down. So the amount is 72,000. During that second year, one more machinery is purchased on 1/10/2021. Record that as bank account worth rupees 60,000. Next, depreciation has to be provided on the book value of the machine. So 72,000 into 10%. So it has to be, depreciation has to be provided at the end of second year. That will be 31/3/2022. Depreciation account. So on the book value of the machinery under reducing balance method or written down value method, depreciation has to be provided on the book value. What is the value of the machinery at the second year is considered as book value. Under straight line method, depreciation has to be provided on the original cost of the asset. So 72,000 into 10%, that will be 7,200. And one more machinery is purchased on 1/10. So 60,000 into 10% into 6 months only, because it is not purchased at the beginning of second year, but it is purchased on 1/10. From 1/10/2021 till 31/3/2022, that will be for 6 months. So it has to be provided for 6 months only. So the amount will be 3,000 and write the total amount as 10,200. So second year also has to be closed. It has to be total 1,32,000. Write the same total under credit side also. From 1,32,000, as we deduct 10,200, we get a closing balance of 1,21,800. It has to be recorded as balance carried down. So the date will be 31/3/2022, end of second year. So we have prepared second year this machinery account. Now we need to prepare machinery account for the third year. So this closing balance has to be brought as opening balance for the third year. So third year begins from 1/4/2022 and it ends on 31/3/2023. So write as 1/4/2022 balance brought down. So this balance will be 1,21,800 and the depreciation that has to be provided on both machineries at their book value. So book value is the value of the machinery during the beginning of third year. So that will be 1,21,800, on which depreciation has to be provided at the rate of 10%. So that will be 12,180. It has to be provided at the end of third year, that is 31/3/2023. So depreciation amount will be 12,180, and closing balance has to be ascertained. So closing balance, that will be 1,09,620. It has to be recorded as balance carried down. So that is on 31/3/2023. So we have prepared for 3 years, and this closing balance, that has to be brought as opening balance for the fourth year. So we are asked to prepare this machinery account only for 3 years. So this closing balance, that has to be disclosed as opening balance on 1/4/2023. The amount is 1,09,620. So this is how this machinery account, that has to be prepared under reducing balance method. So preparation of depreciation account. So when the depreciation is charged on the machinery, the journal entry will be depreciation account data to machinery account. So depreciation account has to be debited with machinery account. The format of depreciation account will be date particulars journal folio amount, again date particulars journal folio amount on the credit side. So the depreciation is provided at the end of every year, first year, second year, as well as third year. So 31/3/2021, 31/3/2022, 31/3/2023. So depreciation is provided. First year, the depreciation amount is 8,000, that has to be disclosed. Second year, depreciation is provided on 2 machineries, so 7,200 as well as 3,000. So total 10,200. Third year, 31/3/2023, depreciation is provided. The amount will be 12,180. So that has to be debited to depreciation account as machinery account, and every year, first year, second year, third year, it has to be transferred to profit and loss account. First year, this depreciation amount has to be transferred to profit and loss account. Second year, 7,200 plus 3,000, so altogether 10,200, that has to be transferred to profit and loss account. And third year, 12,180, that has to be transferred to profit and loss account. So this is how depreciation account, that has to be provided and must be prepared, and this depreciation amount, that has to be transferred to profit and loss account. Thank you.